90% of traders, especially the newbies, draw support and resistance the wrong way. Now, in this video, I want to show you the right ways to draw your support and resistance and how I use my demand and supply zones to spot profitable winning trades in the market. Now, if you're new to my channel, you're welcome to Blockchain Plus. In this channel, I teach you everything about crypto, forex, trading, and how to make money from the financial space. And if you're not yet trading, if you want to join me on my trading journey, first thing you need to join the Blockchain Plus community on Telegram. Just use the link on my bio. You're going to see the community. Join that. Use the link so that you don't join the wrong one because there are a lot of scammers out there. Now, also use the link on the description of this video so that you register on Bitfinex because that is where we use for trading. We actually use Bitfinex or our Bit. So I'm going to drop the link to these two platforms for you. Now, all you just need to do is to use any one of them and register and you get started. So if you're new, please just subscribe to this channel, and then also if you like this kind of video, hit the like button, and then if there's any comment, use the comment section to drop your comment, and most importantly, share this video with your friends. That way you support me and motivate me to deliver even better and higher quality videos and valuable videos for you out there. All right, with all of that said, let's go back so that we do the video of today. Okay, so before we just continue, you can see this is a trade that we are already inside in our community. You can see right here, the trade is just giving us 44%. Anyway, it's just still moving, and then we are waiting for it to hit our tip. So just let me show you what we do inside the Blockchain Plus community. We do a whole lot, and we also trade. I give the signals, and people take the trade, make money for themselves, and then enjoy themselves. All right, so let's continue. Now, this is XRP. So before I show you what you need to be doing, let me first of all tell us what we'll be learning in today's video. So in today's video, we'll be learning the difference between support and resistance versus demand and supply zone. And we'll also know why institutions love demand and supply zone, you understand, and then how to be using these for your trade confirmation. Now, first of all, let's look at support and resistance. So simply put, the support and resistance are seen as key levels in the market. Now, these key levels, because you're using support and resistance, are being represented with just a single line. That is why if you come to this place, this section, you're going to see this area that says horizontal line. So if I just click on it and do this, let me see. Okay, if I just click on this and do this, do this, do this, you can see I'm just drawing one single lines. So this is what support and resistance means, right? So now, how does it actually work? How does it apply? So support and resistance are the ceilings or the floor of the market. So I'm just going to remove all of these lines right now. I'm just going to remove 6 drawings. So and just draw just one or two. Just draw one here and then draw another one right like so. So this resistance, which is the upward, is known as the ceiling or the up of the market, while the support, which is the downside, is known as the floor of the market. Now, in other way, or in other words, resistance is known as a swing high. So this is a swing high, and then support is known as the swing low. So this is a swing low. Now, how do you actually draw the right support or resistance in the market? So that's what we want to know. Now, most people, here is where they miss it. Most people draw support and resistance, one, using a very low time frame like 15 minutes, 30 minutes, or 1 hour. That's one. So secondly, most people draw support and resistance with just one single point line. That is a very wrong way to draw your support or your resistance. Now, the right way to draw support or resistance is to draw it from a higher time frame. Then you switch back to lower time frame to find profitable trades to take. So first of all, you use your higher time frame. Now, if you look at this place, we are on daily. So daily, weekly, or H4 is okay for your support and resistance. Now, if you look at this is on daily. Now, if I just do this, you can see that this is XRP. And let me go to monthly. I want to check something right now. So this is how you actually check the market. Now, if you look at this place, so this is, let me put this right here. Now you can see this is just 1 point. Now this is another 1 point. So in reality, this 1 point on weekly can stand as your support or resistance, because if you switch to daily, this is actually monthly, because if you switch to weekly, you may see other multiple touches around that area. And then if you switch to daily, you can also see multiple touches around there. So valid support, valid resistance has to have at least two touches, at least two. Three touches better, four touches amazing, and more touches. It means that region or area is very strong. The same thing for your support. It has to have multiple touches. Now, just as I said, that is just what it is. Once you find multiple touches in the market, like what we have here, let me see, we have here one, we have here, we have here, we have touch here, you can see there are multiple touches. This one pierced through. There are multiple touches around here. So when you see this kind of multiple touches, it means this area is a strong support. The same thing for the upside. So you can see right here, this is just one, two. So this is a good support, but this is a good resistance right here, but it's not very strong. That means that when this market decides to go back up, it's just going to breeze past here. Maybe you can just touch it. What's going to happen is maybe it goes like this, like this, like this, touch here, come down, then the next thing it moves above it. Right? So that's because this support here is very small. Now, if you look at this one, why the market is dancing around all of this place right now in this place is because of the multiple touches that we had all of this part. So once you see those kind of touches, it means that area is strong. Now, moving away from support and resistance, now let's talk about demand and supply zone. This is the juicy part of trading, because this is what institutions use for trading. They don't just rely on single point of price like this. Now, this is a single point of the price, which is 2216. This is single point of the price, which is 114, right? So they don't rely on single point of price because it doesn't really make sense. You understand? Rather, they rely on zones. That's why we have demand and supply zone. So supply zone is the area where the market sell-off happens, where the sell-off of the market happens. While demand zone is the area where buyers come in to buy in the market. So, as the name implies, it is a zone, not a point of price action. So, it's a zone. That means we can have a zone like this. Now, when you have a zone like this, it means that we have price ranging from here to this place. So you can see that the price range can be from 208 to 211 or 212 or 210. That is a zone. Now, this is where institutions get it right, and this is where newbies fail, because you need this zone for you to be able to tell yourself, okay, this is the price range that this market can operate in. If you don't do that, at the end of the day, you may enter and the market kicks you out. You get. So how do you now draw a good demand and supply zones in the market? So that is the most important aspect of this video. I hope you're enjoying this video and you're getting value from this video. Please, if you are doing and you've not subscribe. Please just subscribe to this channel, hit the like button, and then if you have any question, use the comment section, and then also don't fail to share this video with your friend. Now, this aspect is the most important aspect, which is how to draw your demand or supply zones. Now, the way I draw my demand and supply zone, because everybody have their way, they draw their own. I have two methods of drawing my demand and supply. One, I use the week. If I have a very long week in that area, Then secondly, I use the body of the candle. I'm going to show you what I mean. So if we have, let's say we have a bearish candle like this, sorry, a bullish candle like this. Okay, let me just do it better so that you understand. So we have a bullish candle like this. This is a bullish candle right there, and then we have a bearish candle like this. So this is an engulfing candle, right? Now, because we have this kind of candle, now, like I said, demand zone is a sell-off area. So because we have this kind of candle, now this is going to be my demand zone is going to cover the bullish candle all the way to the down and then extend to this part like this. So that is how I'm going to draw my supply zone, because this is a sell candle, right? This is a sell off. So this is going to be my supply zone. Same thing also, if I have a bearish candle like this, and then I have a bullish candle like this. Now notice this one, the candle pierced through the bearish, right? The candle is below the bearish. It engulfed it totally. So if I have a candle like this, now my demand zone is going to cover from the body of this candle up to the down of that candle, the bullish candle down like that. And I'm going to now extend it to the future, just like that. So this is going to be my demand zone, and this is going to be my supply zone. So let's just look at the market and identify these zones in the market and see how to draw our demand and supply. Now, for you to draw your demand and supply, you're no longer using this line. Okay, sorry for that. You're no longer using this line, which is here. We are going to be using the rectangle, which is right here. So you can see the rectangle right here. You just pick it and then you draw your zone like that. Now, let's see how to draw our zone in the market. Now, if you look at this place right here, you can see an example of what I just showed you. You can see this is a bearish candle, this is a bullish candle, right? So my demand zone is going to be from the body of the candle right down here to the wick of this. You can see there is a wick on this. Let me just expand it so that you see. Now, because why I'm doing all of this is because this is just so many people feel it. Now, there is a wick here. You can see this wick. I covered this wick right all the way to this bottom. Let me use something that will stand out right here. Okay, good. There's a wick right here that I covered. You can see it right there. So I covered that wick with my zone. You can see right there. So you have to cover the wick, and then you have to start from the body of the bearish candle like that. So this is how I draw my demand zone. Now, if you look at the demand zone I just drew right now, you can see that after this, the market came back into this zone right here. Now, when you draw your demand zone like this, it helps you to know where you're going to set your stop loss. You're just going to set it few price away from the last, which is here, which is right at this bottom, not inside. Just set your stop loss just right after the zone, because anything that makes price to break it and continue, then it means it has invalidated your setup. So you want to do that so that when the price breaks and goes down, it means the setup is no longer valid. There's no need chasing it at that point, right? So that is what you need to do. Now let's also identify, this is for demand. Now let's also identify another demand right here. You can see right here. Okay, let me just look for something more. Let me go down to the past. Okay, so you can see right here, there is a candle right here. You can see there's a candle with a long wick right here. Now, this candle with a long wick is also a demand zone, because this was where people came in to actually buy the market, and the market rejected and went back up. So this is what I am going to do. Sorry, I'm going to use this rectangle. For me, now I'm going to draw from this. Okay, let me make it clearer for you so that you see. Let me just draw this and keep it there. Now, I'm going to draw my zone from this body of the candle, not the top of the body right now. From the bottom of the body, you can see the bottom right and not this top. So I'm going to draw from the bottom, covering all the way to this one. Now, if the wick is too long, I don't use it. I just leave that one alone and move on, because there is no need and looking for trade in that particular one. So I'll just draw like this, cover this down, and then extend it all the way to this side, like so. So you can see right there. So let me extend this like this. Good. Now the reason I said if the candle is too long, I leave it, because when the candle is too long, then the price range becomes too much. You can see right there that the price actually came close to it, to touch it. Now if I had moved it at the top of this, then we would have gotten it right, like so. But the reason I didn't move it that way, let me put it back the way it is. The reason I didn't move it that way is because the wick is already getting too long. Except if I want to do it that way, except I want to use lower leverage for the trade. You understand? So if I just drop this thing like this all the way to this side, you can see that price came back to that zone. You can see price came back here to test. Price came back here to test it right here. You can see if you had waited, you would have entered here, and then you have also gotten a move up. Now let's look at supply. So supply is the sell-off zones, right? So in this one now, I'm just going to remove all of these at the top, all of this. I'm going to remove this again. Now for this, now you can see that there is a bullish candle right here, and there is a bearish candle. So this bullish candle, 1 2 3 4, they are not actually strong bull candles, so they are sell-off regions. But the bulls wanted to keep the market, meanwhile the buyers had better control. So because of that, you get your zone from this one. See this one right there, draw it all the way to this point, and then extend it like this. So I'm going to just drag it like this, cover this four bullish candle is being covered, and then I extend it all the way to this point. So you can see, if you drew this, when the market dropped, all you did was come back to enter, test the zone at this point, but never went above it, and then the market went down. So this is how you actually draw your demand and supply zones. Right, now that you understand how to draw your demand, your supply zone, now let's see how you can actually use this to take trades in the market. Now, this does not imply that all your trades with this setup is going to be winning trades, because of course there is no one strategy that is 100% safe proof. You understand? Strategies are just what it is. We are taking the market, taking the strategies, predicting the market based on the future. We don't actually see the future, we only predict. You understand? So when you take this, it doesn't mean that it's 100% safe proof. You get? So there are sometimes it's going to invalidate, and it's going to hit your stop loss. That's why stop loss is very, very important. So you take these things. When the price happens, when the market happens, all you need to do is to wait for price to come back to that level before entering it. Let me give you an instance. So you see here, right? Okay, I've done this one already. I want to look for something else. I want us to look for something else. Let me see. All of this, please. Okay, let me just look at this. Okay, let's look at this right here. So if I do this, you can see this bullish candle. Now this one is small, so I'm going to just draw in this, covering the whole of that candle down to this side, like so. So I'm going to extend it like this. I'm going to draw it down to cover that candle very well, like so. Now you can see, after this drop off from that zone, after this drop off, you can see that the market came back into the zone. And like I told you, I said you need to set your stop loss just few inches above it. So now you can see when the market came back, all of these places will have been your entry. All of these places will have been your entry. And then the market dropped. You can see how the market dropped. It came back, it never went up to that place, it dropped again, came back. And since then, the market has been going down, came back here, and then we are right in this place. Now that is how you use it. You don't just go ahead jumping into any trade. You use it when it is at a strong level, like this place right now. is a strong level, and then you see that there is a strong sell off. Like this candle right now gave us a strong sell off. Also, same thing like this place, this candle also gave us a strong sell off. After we drew this 5, we cover these 4 candles like this. You can see that this candle gave us a strong sell off. This one did not come back to it. This came down, and then this entered that zone. So you must wait for the candle to enter those levels. And there are also other zones that are always in between the zones. For instance, now this is a zone, this could be a zone, this could be a zone, this could be a zone, and then also this right here is a zone. So you can draw this zone right here. You can see this candle, this place, and then like this is a zone. So when you miss, if you draw it, extend it to this side, you can see like that. So now when you draw it like that, another thing you can do is to now check your resistance. So you can see right here, you can see right here, this one did not touch it. So when you draw it like this, it now makes it easy for you to wait after this zone and this sell up. You can see the market came back into it, and then we had a nice ride all the way down. So if you were trading this market with this, maybe you would have caught this move all the way down, right? So let's look at another market before I round up this trade, this video. I hope you enjoying this video. So let me look at Ethereum USDT. Let's look at Ethereum USDT together. All right, so this is Ethereum USDT. I hope you're enjoying this. Please, if you're enjoying it, just hit the like button and also subscribe to this channel. So let's look at this. This is a demand zone right there. So for me, it's always easy for me to just look at the market and look for where to draw my zone, extend it, and see what happens in that zone. So just like that, this place is a demand zone. You can see the market left it, came back into the zone, left it again, came back into the zone, and we are moving away gradually from the zone. Now, when you are trading this kind of setups, one thing you need to also be careful with is the wicks. So there's one thing I always stay clear of. If I see the market, okay, um this is Solana USDT. You can see right there on my charts, I always use zones, and then I use support and resistance. The zones are easier for me to trade. So I wanted to check something on XRP right now, so that I'll just show you what I am trying to say. Okay, let me just go back to XRP USDT. So let's just check XRP again, USDT, and let me show you what I want to say. Now, if I am trading the market and I see this kind of long wick, I'm always skeptical and careful with it, because in reality, this market will come to fill this week again. So whether I like it or not, the market will definitely get to this level. It may not be now, it will be in the near future, but it will get to that level because it has to fill this week. There is a strong void in this place that has to be filled in the market. So when you are trading this kind of setup, this kind of strategy, always be careful with long wicks. When you see long wicks in the market, always know that the market will come to fill that wick, whether you like it or not. It is not in your place to avoid it. Just like this week right here, you can see the market came back to those wicks. So this market has filled this week. That is why you see that the market decided to move away, and then it came back to form this one. So whether I like it or not, it's going to come back to fill. So guys, this is how I use support and resistance, demand and supply zones to trade the market. I hope you enjoyed this video. If you did enjoy this video, just drop it in the comment section. Let me know what you feel about this video, because your comments and your feedback helps me to provide or to produce better and more valuable videos for you. Just drop it in the comment section. Let me know what you think. Alright guys, that is it for me in this video. Till I come your way again, remain blessed.